Have you ever opened your investing app at 11:47 p.m., already in bed, thumb hovering over a stock that's up 18% today, and you're thinking, if I just throw in $2,000 right now, and then 2 weeks later that same stock is down 37%. You don't even want to open the app anymore, and you're telling yourself, next time I'll be more patient. If that's you, yeah, that was me too. Let me tell you why this keeps happening. It's not because you're bad with money, it's because your brain is wired for excitement. Most people think getting rich means being smart, finding the next Tesla, timing crypto perfectly. But here's what most people don't realize. The fastest builders of wealth do boring things, and that drives intelligent people crazy. Smart people crave complexity. Your brain gets dopamine from predicting, so boring feels painful. And that's why people sabotage themselves. This is where investing gets psychological. According to Dalbar, the stock market returns about 10% per year, but the average investor earns only 3 to 4%. Same market, same stocks, totally different results. Why? Because humans chase hot stocks. They panic sell during crashes, and they constantly change strategies. Not because they're stupid, but because boring feels emotionally painful. The data here is brutal. Behavior matters more than intelligence. Let me show you something simple. Say you invest $500 per month. Not sexy, not impressive, just automatic. In a low-cost index fund, earning about 10% annually. After 10 years, about $100,000. After 20 years, about $340,000. After 30 years, $1 million. In the first 10 years, you barely see progress, but in the last 10 years, the growth explodes. This is where compounding finally takes over. Most people focus on how to invest, but wealth is mostly built by time, consistency, and not messing it up. Warren Buffett made over 99% of his wealth after age 50, not because he suddenly got smarter, but because compounding finally took over. Here's what most people don't realize. The hardest part isn't math, it's not interfering with the process.
Now, you might be thinking, I want faster results. That's totally fair. But here's the uncomfortable truth. Trying to go faster usually makes you slower. Say you chase stocks and crypto and options. Some years you're up 40%. Other years you're down 50%. A 40% gain followed by a 50% loss, you're actually down 30% overall. Volatility destroys compounding.
Think of wealth like going up in a building. Exciting investing is taking the stairs. Sometimes you sprint, sometimes you trip, sometimes you fall 3 floors. Boring investing is an escalator. Slow, unimpressive, relentless. As long as you don't step off, you eventually reach the top. The escalator beats the stairs every time. So what should you actually do? Here's a simple, proven setup. Step 1. Automate everything. Remove decision-making entirely. Step 2. Use boring assets. Focus on index funds and low-cost ETFs. Step 3. Stop checking constantly. The more you check, the worse your returns get. Step 4. Increase contributions, not risk. That's how millionaires are actually built. I once met a guy in his mid-40s. Just a regular job, normal car, no trading, no crypto, no hype. He invested $700 per month for 25 years, index funds only. Net worth, $1.8 million. No stress, no drama, no burnout. And here's the crazy part. He didn't even think he was good with money.
Here's what most people don't realize. The fastest way to $1 million is not finding the best investment. It's finding the strategy you won't abandon. Because the biggest enemy of wealth is you getting bored and changing plans. You don't need brilliance to become wealthy. You need patience, discipline, and time. If you start today, future you will thank you.
Hit subscribe and build your wealth the boring way.